Good afternoon, everyone. Welcome to the podcast today between TaxFitness and ESS BIZTOOLS. I'm Peter Towers, Managing Director of ESS BIZTOOLS, and I'm joined by Darren Gleeson, Managing Director of TaxFitness. How are you today, Darren?
Fantastic, Peter. Thanks for the opportunity to talk to everybody today.
That's very good. Okay, I'll just give a bit of an overview of what we're here for. If you're new to watching this particular series of podcasts, ESS BIZTOOLS has joined with two of our affiliates, TaxFitness and the Boss Factor Library, to bring accountants and bookkeepers an insight into a range of advisory services and selling aids to assist accounting and bookkeeping firms to achieve a key strategic partner category rating from your clients. Not from anyone else, but from your clients. The key strategic partner, as defined by Intuit QuickBooks, is our accountant is a key partner in our business and our go-to professional for advice. They are extremely valuable to our growth and success. Now, I think that's what every accounting firm and bookkeeping firm in Australia should be aspiring to. But when QuickBooks prepared their 2025 SMB Navigator report, they found that only 15% of 500 small businesses that they surveyed gave their accountant that rating of being a key strategic partner. ESS BIZTOOLS, TaxFitness and the Boss Factor Library are committed to supplying advisory services and selling aids which will assist all participating accountants and advisory firms dealing with any of our firms to achieve the key strategic partner endorsement from your clients. Darren, welcome to this podcast today. And just before we start, what's your thoughts on helping accountants to be key strategic partners in the eyes of their clients?
I think it's critical. And the main point you made is that we've got to be, every accountant website I go to, they say, oh, we're the strategic, we're the trusted advisor, we're this, we do business advisory, we do that. That's all well and good, but it's got to be in the eyes of the client, how the client actually perceives you. And also, I suppose the real test is, what do you actually do for them?
Yeah.
Have you got the products? Have you got the tools? Have you got the training? Have you got the systems and the process? And do you actually provide these services? Because we've had this conversation before, like some accountants on their website, they do an R&D, but you ring them up, no, they don't really do it.
That's right. And that's false representations getting made to the small business community. And at least 50% of the small business community really need strong accounting assistance. But the other 50% also need assistance because many of them would like to grow. They'd like to scale up their operations. They'd like to go on an innovation journey. But some of them are reluctant because they really don't get enough enthusiasm from their accountant about going on that journey. So, Darren, obviously your organisation, TaxFitness, has a couple of different main product areas, and we're featuring one of those today in benchmarking. So you're going to talk to us about why benchmarking changes client behaviour.
Yeah, well, the first thing is accountants are very good at dealing with data, and we give the client numbers, but so what? What does it mean? As accountants, we just, often we've been attracted to this profession because we love numbers and we love all that type of stuff. But sometimes we're not very good in focusing on the important part, which is actually analysing those numbers and what they mean, and then communicating that to the client.
And that's a very important point, isn't it? Analysing them, not just presenting a printout from a computer and saying, well, there's a report. I found out years ago as a young accountant, I did something like that, and I'd just been made the CFO in a public company, and I basically handed over a report, very proud of that report I was actually, but I hadn't taken that extra half an hour to an hour to really read through it. And we had a director on our public company board who was a very skilled interpreter. He wasn't an accountant, but he could read balance sheets quicker than most people. And he asked some interesting questions. and I couldn't answer him. And
No.
my esteem dropped. And this is important. I think our role is to explain to clients what these figures mean.
And the benchmarking, the TaxFitness benchmarking software is so important because it provides context to the numbers. Like you could have a client, like my daughter Gemma, the first year of trading, I think she made $55,000 profit. The second year, 30th June 25, she made 207. Is that a good result? You know, it was 300%. Yeah, it was. But the bottom line is, with her level of revenue, if we had it benchmarked against the top 20%, she could have an extra $60,000.
Right.
So the analysis is, we benchmark you against the top 20%. You're ticking a lot of the boxes, but in her case, the cost of goods sold was 30% instead of 25%. That's cost you $60,000.
And it probably cost us $300,000 in the business valuation.
That's another thing as well. Exactly. So I could just give her the report or the profit and loss and say, read this. What does it mean? It doesn't tell her how to change behavior or what she needs to focus on. In her case, that was that specific cost of goods sold.
Many years ago, when I was running an accountancy practice, I banned mailing financial reports to clients because I was turning up at their factories or their offices, and I detested doing interviews in our premises. Premises were very nice, but
Yeah.
I wanted to go into the client's premises and see how they operate, see their immediate support staff, because we were communicating with them. And after I found about 6 clients out of 10 had to go to the drawer and pull out the big folder and then open it, to open the seal to get out their financial accounts, I said no more. And that's one of the problems. They need these financial reports explained to them.
Oh, 100%. And that's my bane with accountants as well. Like 20 or 30% of the accountants I speak to, they do their year-end compliance stuff, and I say, what's your process with the client meeting? Oh, we don't do that. We just email it to a client, and they sign it in it. I said, that's no good. It's that conversation where that you actually go through the items and explain it to them. And then you got that back and forth. And they wonder why they don't build up their practice and get more referrals and more advisory services, because they're not having that more in-depth conversation with the client.
And that's very important. And quite frankly, that's the way the big end of town operate in any case. I found that in the public company. The CEO didn't actually read the profit and loss accounts because we had about 120 different operational, which were then consolidated. So they lost all their merit. But he'd sit there and say, who didn't meet our targets, Pete? Who was down on gross profit? Who didn't achieve what we'd set out as a target? And that was every month. That wasn't just once a year. That was every month. Okay, Darren, well, we might move on. Now, why don't you think clients act on this whole thing? Is it because they don't understand it, or is it?
Well, the data, for the first thing, is the data they're being presented by the average clients. You know, sure, we got our zero thing, and we can see the profit for the month or the quarter or the year. But so what? As I said, we need to put some context about it. And one of the things that works very well is we need to compare it to what, in our case, the top 20% of the firm's doing. Because otherwise, you know, you look at your numbers and, yeah, it was better than last year. But where's the context? It doesn't tell me that I could be doing a lot better, like just fixing one little issue and I'd have an extra 50 grand. So this, often as accountants, we hit people with hundreds of numbers when we really need to consolidate it down and say, here's a one-page report. These are the 3 things we need to think about.
Yeah, and this is a big issue, isn't it? Just concentrating on some of your articles, even say 1, but 1 to 3 key factors. The gross profit.
I say 1.
Yeah.
One of our subscribers' clients, we've been working on a plastering company for like 3 years. Over that 3 years, we've been benchmarking them quarterly. We've only been focusing on their subcontractor issue, which started off at 70%, and it's gradually going down and on the way to the ideal 40%. But that has been so profitable, just that one issue, because their profits have gone from about 300 close to 2 mil. So there's other stuff we can talk about, but why talk about the little stuff? Let's just focus on the one thing, the big thing.
That the client really understands that then, doesn't he? He knows how many subcontractors he's hiring and what the costs are.
And the software he needs to get, and, and then we just keep working on that until we get that into the ideal range.
So the example that I know you've given me as a briefing sheet of how the benchmarking improves profitability, in this case by $53,000.
Yeah,
Are you emphasizing to the client also the other fringe benefit in all this is the value of their business?
100%. As an aside, in the TaxFitness software, we're sort of fleshing it out at the moment, but we've got a business valuation database. So for 400 different industries. So depending on the industry, we can, at the moment, to calculate the business value, it's manual, but in 12 months, it'll be sort of automated, push the button, one-page report. But even calculating a manual, we know that, the earnings before interest tax multiples that apply for this specific business and what the current value is. And then we have that, what ties in the top 20% report is we put in there the estimated goodwill value, and hopefully it's increasing.
Yeah.
Because as you said, that the upside of not just increasing your business profits by 60 grand is that might be worth 5 times that. So that might be an extra 300 grand of increasing your net worth when you sell it.
And the benefit for the client is that they're very prepared if a potential purchaser walks in and knocks on the door. I've seen that happen a few times, not that many times, but in all but one, the client wasn't ready. They said, "Oh, yeah, we'll have to get some accounts prepared. We'll have to do this. We'll have to do that." And the potential purchaser said, "Well, when will you have it?" "Oh, I got to see my accountant and blah, blah." And 6 months. Well, he'd gone. In fact, he bought something else in the same location where the figures were very readily available.
And it's one of the cash cries of business as well, or good management, is you should really run the business now on the proviso that you'd sell it tomorrow. So you should have all the systems, all the process, all the accounts up to date, like you could sell it tomorrow, even though you might not be selling it for 10 or 20 years. Yeah. That's the way to run a really good business.
Yeah. Okay. What does what benchmarking actually does? Do you just want to explain to our listeners as to what benchmarking's actually doing?
Well, I suppose our benchmarking is comparing to the top 20% of firms in each industry. So we've got 6 or 7 main KPIs: cost of goods sold, subcontractors, rent, wages, overheads, owners' comp, and net profit. And basically, what we're doing is we're taking the business owner's actual numbers, and we're comparing those KPIs against the top 20%, and that will flow through to what the profitability should be. And it's very it's very simplistic in some ways, but it works because it's got that laser focus. Because as you know, small business, they've got a ton of things happening, staffing, ATO and clients and all this stuff. So this narrows it down for them to focus on the 1 or 2 main issues.
Well, that's right. And that's a good point what you just said, because, I reckon there's at least 40 different job descriptions in any small business. And invariably, the owner ends up wearing 35 of those at least.
You're wearing every hat. You're making your own coffee. You're going to the bank. You haven't got a team of 100 like corporate.
So it's very important getting all of this data so that you can be helping the client. So when you say to a client, you're 5% behind the benchmark on cost of goods sold, what is the reaction? Do they understand it at that stage, or have you got to spell it out by giving them the actual dollar figures?
Well, we want to give them that. Our process is we give them the 5-minute benchmarking report. So it takes literally only 5 minutes. Junior staff can prepare it, and that will show that your profitability is down, or your cost of goods sold is costing you 60 grand, and it's just 1 page. Yep. It hasn't really. It's only got 7 or 8 lines on it. So, and on the right where the warning or problem areas, it's very, very clear. So we have that conversation. We say that cost of goods sold issue, it's costing you $60,000. Then we say to you, Peter, what do you want to do about it? Okay, and you'll either say, I don't care, I'm making a fortune, I've got too much money, I don't care, I'll pay more tax. So we don't take it any further. But most likely you'll say, what can we do about it, Darren? How can we get that? And then I'll introduce you to our business advisory package, benchmarking package, which is our 12-month program where we work with you, benchmark your business every quarter, and we will work together to get that $50,000 or $60,000 of extra profit from the cost of goods sold. So it's a 12-month advisory process.
And what percentage of the clients take you up on that invitation that you're going to help them?
Well, the 5-minute benchmarking process is only actually about 3 months old. So far, we've tested it on some firms, and it's running about 25%. So 25%, yeah, let's do it. And they'll pay, depending on the turnover, like Gemma's turnover was 1.1, so she would pay $2,500 a quarter, which is not, by 4, so $10,000 over the year. But at the end of the 12 months, she'll have an extra $50,000 or $60,000 profit. So 25% take it up. Another 25% say, yeah, that sounds good, Peter, but a bit expensive for my taste or whatever. So then we offer them just a once-off benchmark. So we do a report, but we only do it once, and we show them the strategies, and we only charge them $2,500 for that. Okay. And then the other 50% will say, some will say, and I'll do it myself. Or some will say, the old, I'll think about it and I'll come back in 12 months. But it doesn't matter. If you've got 100 business clients, you get 10 or 20% the first year, and each one you get on the annual package is $10,000.
And
so you don't need to get 100% to start off with. Let's not.
And they start talking to their mates and their colleagues, and
exactly.
So, they might be paying a bit more tax, but tax doesn't take 100% of it, does it?
No. Paying tax is a good thing. I keep saying that all the time. Paying tax is fantastic.
Yes. Okay, so what's the behaviour shifts that occur within an accountancy firm out of benchmarking?
Well, I suppose from the client, it changes the client's mindset of what the accountant is about. Because at the moment, unless we're doing this stuff and actually adding real value, it doesn't matter as an accountant what I put on my website, what I call myself, they still think we're just doing tax and compliance. Yeah. Let's make the shift to advisory where we actually increase their profits. We work with them. True advisory is increasing their profits and making their business more valuable, creating wealth. People will pay a fortune for that. They'll pay anything for that, won't they? Whereas they'll haggle over $500 of extra compliance work because they don't see the value.
Yeah, no. That's only getting done for Canberra as far as they're concerned.
Exactly. Yeah, that's just an impost. Whereas, it's like anybody, I say to you, Pete, give me $10,000 over the next 12 months. We work together and I'll increase your net worth $300,000. It's a no-brainer, isn't it? Even if we don't get all the way, we get to 200 or 150. It's a brilliant investment. Okay.
And do you find the younger accountants keen to get involved in the benchmarking process?
Definitely. I think, to be fair to the accountants, there've been a few benchmarking options, but there hasn't been a lot of, I suppose, products or that were easy to use or applicable. Because some of the really good benchmarking products, they benchmark like 200 KPIs and stuff, like way too much. Too complicated for the client and too complicated for me. So we need something that is a bit more simplistic and focused. You're right. The younger account generation, they don't want to be stuck in that boring tax compliance stuff forever. They, as a lot of them say, they really enjoy the twos and throws and of the advisory where you can actually add value.
Yeah, and the term I use, because I hear it that often from them, is they don't want to be historians.
No.
Now, they realise some of it's history, but they want to be there helping the client to make things happen, which is how they view what happens in bigger businesses, because the accountants are concentrating on that.
It's like my dad used to always say, with life, you got to look forward, don't look backwards. What the past is. You might add wins, you might add losses. Who cares? It's completely irrelevant. It's what's in front of you on the road.
Where you're going to be next month, 6 months, 12 months time.
Yeah,
and then helping the client achieve that. And obviously, benchmarking is one of those things.
And it can be powerful. You can, as I said, we one of the clients over the last 3 years have been doing it as they went from 300 to 2 million. Not every client's going to go to 2 million, but as you can imagine, that sort of changed their life. They bought a $3 million.
I heard it. Yeah.
Blah blah blah.
And the valuation of their business went up very nicely, didn't it, on that basis?
And from the, just the accountant's point of view, that was only a $4,000 annual compliance fee. And over the last 2 years, it was $4,000 a month for the benchmarking, so 48 grand a year. So everybody's winning.
Okay. Okay. Why do accountants avoid benchmarking then?
I don't know. Well, it could be a couple of reasons. It could be inertia. Let's just keep doing what we've always done. Some accountants get a bit scared of the conversation. They think, I'm guaranteeing that they'll have an extra 50 grand or 58,000 in profit. We're not saying that. We're saying we've got some strategies. We're going to work together over the 12 month and we'll improve things. We'll realize some of that. So we're not guaranteeing they're going to have extra profit. I think they're probably the two main things. And then the third thing are probably they haven't really had, I suppose, affordable tools and software and a process. Because the whole thing about TaxFitness as well with this benchmarking, the software is one thing, but the main thing I want to sort of emphasize is it's a complete benchmarking system. So the system is the most important thing. The process, the software is part of that, but we've got the system, we've got the manuals, we've got the training, we got the webinars, we got the price list, we got the whole basically box and dice to do this.
Okay. So what's your recommendation to accountants? How do they get started on this? Surely they don't go in and grab 20 clients tomorrow and say we're going to start benchmarking. So what's the process?
The first thing is we've got to be realistic. They're going to need the tools. It's either going to be there's a couple other benchmarking software, or they're going to have to use the TaxFitness benchmarking software. They want to look at us. They need to go to the TaxFitness website. They can book a demo with me. They can mention that they've come from ESS BIZTOOLS webinar, and there's a special sort of, I suppose, referral code discount or benefit that they can access as well. But the bottom line is, if they're interested in it, book a demo or talk to me, and I'll run them through the process.
Yep. Okay.
And it's like anything; it takes a little bit of work to get up to speed. As you can see, this is pretty straightforward, so it doesn't take a lot, but you still need to make a commitment. Otherwise, nothing changes.
And I imagine that in some of them, especially some that are a bit smaller, their size of their business might work against them on to achieving what the top 20% are achieving.
Definitely. We're not saying every business can be in the top 20%. It's just like, you've got your football team, AFL, you've got 19. We're not saying the whole 19 teams can be in the top 4 or the top 20% or whatever. But what we're saying is if we want to try and move up and get better, we need to be following what the top 4 or the top 20% are doing. The reality is some business owners, their lifestyle businesses, they're just not interested in moving up, and that's fine. But the ones that want to move up, these are some of the things we can work on to improve their performance. So,
and some businesses, this might help identify a bit more of their slippage, their wastage, what's been stolen from them, because you'll get the cost of sales, and they might work on it for 3 or 4 months, and they're not getting close enough. But that, especially in retail outlets and in restaurants, that slippage can be quite significant.
Well, when I was in, we had an accounting practice 30 years ago. One of the staff, I'm not sure if you call it slippage, but stealing money. Just.
I get money. Yes. So it's all things that are coming that are going to aggravate that cost of goods sold, aren't they?
100%.
And at least it's being identified. And once something's identified and the client's got this acceptance, then if my competitors generally are in this top 20% category, why aren't I?
Well, it's that fear of missing out as well, isn't it? If Peter can do it, why can't I do it? What the hell is wrong with me? Peter's no better than me, and it's true.
I found years ago, I had 2 clients in the same industry. They were trading type businesses. One was extremely successful. The other one was no good. And his charge out rate was about only about 70% of what the more efficient firm was for his trading. So I kept on saying to him, you've got to increase your charge out rate. He knew I acted for the other firm. In fact, that's why he'd come to me, because I was the accountant for them. And I'd always told him I couldn't tell him any secrets, but I could act for him. And I said to him, well, you're not charging enough. Oh, he said, I'll go broke if I charge more. I said, well, one of your problems is because you're not charging enough, you're not making enough money. One of your problems is your two-way radio system doesn't work. Because he said to me, I've got to keep on coming back to base. I said, well, that competitor that I act for, they don't come back to base. They got 50 odd guys out in the field. They're just getting on it was back in the two-way days. It'd be a lot more sophisticated today. But they were communicating. They were getting their next job. As long as they had the right gear on board, they could go and do it. So this might also come out of this whole benchmarking process. It's really inviting a self-evaluation of how they're running their businesses, isn't it?
Well, it's a whole lot, yeah. And this thing about profitability, if you're not, as you said, if you're not achieving the profitability, you can't invest in the equipment, you can't invest in the premises, you got crappy old utes. It's a vicious circle.
Okay, so you got any more what you want to add at this stage on benchmarking?
Oh, I suppose just the main closing thoughts is, compliance, compulsory, we know that, but it's historical. It's looking backwards. Benchmarking is looking to the future. How we can, I don't know anybody who doesn't want more money because, the cost of living's going up and, all that
going up, isn't it?
Insurances, all that's going crazy. No point us whinging and moaning about it. We need to make our businesses more profitable so we've got more money to pay for that inevitable price rises.
Okay.
And the opportunity's there. We just need to take the ball between the a bit and do something.
Yeah. Darren, as you know, I've been around a few years in the accounting field, and I was way back in the 1982 or 83, I first got introduced to the Financial Management Research Centre, which was based at the University of New England in Armidale. Now, the history of that centre had been running for about a year when I first got involved with them. Was that the Institute of Chartered Accountants and the Australian Society of Accountants, which is now the CPAs, had gone around and sought out universities around Australia who would offer specific courses to assist accountants to offer a broader range of business services. They never called them advisory, business services to SMEs. A broader range of business services to SMEs. Isn't that what we're talking about now? And that was 45 years ago. And they developed the whole concept and were very successful in training accountants. But over the years, I think some accountants took it up. It's probably the 15% that the Intuit identified. And I'm sure there's others that come along since the FMRC days. But going back and thinking about that, this is nothing new. Some accountants are probably sitting there saying, Darren's thought up this idea and he's promoting it. Well, benchmarking's been around since 1983, 84, because FMRC were doing it. They were identifying what you should be looking at.
I'd even like to correct you on that, Peter. It's been around thousands of years.
Oh, yeah.
Like one army would copy what benchmark against the other army's doing, or even the potter beside the Nile River. They would benchmark how many pots Peter makes in a day compared with, their competitor. It's been around thousands of years.
Yeah. So over the years, that business that FMRC established went down, and they created benchmarking. And originally, accountants were filling in forms. My firms we used to do it in June every year because before the superannuation funds become as popular as they are, we tended to run out of work in June. So our accountants would sit there and fill the forms in by hand. We'd send them off to some sorting house in Melbourne who'd put it all together and prepare the data. And that was coming back, but I don't think anyone grasped the business opportunity that benchmarking was presenting to not only the client, but also to the accounting firm. And that's what you have done. And this identifying the top 20% of an industry category, I think, is very, very good and very important in this overall process.
Well, also that top 20%, I was trying to think the other night how I sort of popped in, but I think it sort of came back to the Pareto principle, which we're all aware of, that,
80-20.
80-20. And we know that, in your accounting practice, 80% of your profits come from your top 20% of your clients. And 80% of your problems come from your bottom 20% of clients. You know what I mean?
Yes. Okay, well, the other side of this story, of course, is ESS BizTools is involved. And we've been around for 27 years. And basically, what I was trying to do with the agreement of FMRC was to go out and spread the word to accountancy firms and develop actual forms, templates, papers, videos that they could use in their practices. And because FMRC's mandate from the university was basically to be a training organisation, and that's what they did. They broke off later on, and ran it as a private enterprise business, but it was always delivering training as such. So within the ESS BizTools starter package, which is part of the promotion that we've got with your business, TaxFitness, our subscribers get access to a monthly newsletter we write for them. They badge it with their name and send it out. We write 4 to 6 articles each month in that newsletter, targeted at I've broken down the categories of small businesses. I think we've got 7 categories. We try to write an article to cover someone just thinking about buying a business, to someone that's about to sign a contract, and obviously someone in business for 6 months. They're a different category. And then later on, someone wanting to retire, buy another business, or scale up. So the starting a business package guides them through that process and helps the accountant. Instead of you as the accountant sitting there and writing notes for your client, you just badge our material and send that to your clients. Research and development introduction. I'm a strong supporter of research and development for small businesses because I think too many firms miss out on the opportunities. So we have a package which you can introduce to talk to your clients about it, find out who's interested. Over 7,000 small companies in Australia, turnovers under $10 million, participated in the research and development scheme in 2022-23. We haven't got the figures for the following years yet from the tax office, but that's a lot of businesses that actually got started. Unfortunately, a lot of businesses get disheartened because they talk to their accountants and they say, well, we really don't know anything about research and development. Well, come and talk to me. I'm happy if you become one of our subscribers, you'll be trained in how research and development operates so you can help your clients. We've also got industry charge out rates for tradies. I find that's a big problem. It's interesting. I wonder what the benchmarking exercise is telling you on a lot of the tradies, Darren, because I've asked tradies over the years how they set their pricing, their charge out rates. And quite a number of them tell you they go and get into the pub and listen to what one of their competitors is talking about. And that's no way to run a business, is it? Well, the charge out rate calculator allows your client to nominate what they believe the productivity percentage will be, what they can charge to clients in stickable bills, and they'll get paid, and what their overheads are, what their profit they want to make, and the system will give you the charge out rates to charge to achieve that overall profitability. So that's the type of services. We also add the SME needs analysis. This is a document that was originally developed by Andrew Geddes, one of the founders of FMRC, and it was to overcome the problem that a lot of accountants seem to have in communicating with their clients. In trying to sit down and ask your clients some questions so you get feedback as to really what they're worried about. And they may be sitting there, they've read a report or they've heard one of their competitors talking that their gross profit percentage is running at 38% and they know theirs is only at 29%. But they really don't know whether an accountant who is in public practice is able to help them. And this is this problem I think we've got as a profession, that we've made it so that all they think about is tax, 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 as far as an accountant's concerned. So that's a brief overview of what ESS BizTools. And why we're mentioning that is we've got this special promotion with your organisation, Darren, TaxFitness. So TaxFitness is offering a $200 discount on their normal subscription, which is $1,200 plus GST for the year. So if you wish to come into this package, it costs you $1,000, and ESS BizTools will give you free access for 12 months to our starter package.
Oh, wow. Amazing.
And so you got that together, and you got 12 months access to TaxFitness, and Darren can take you through the benchmarking side, and I can take you through getting the information to get your clients properly set up in the first place. Because a report published 2 years ago by MYOB identified that hundreds of businesses that had become their clients, MYOBs, were not properly advised or were not advised at all on some of the problems in setting up a business. And if you want more details on that, please contact me. But it related to debt, giving debtors, dealing with suppliers, opening accounts, etc. So all you've got to do if you wish to participate in this program is go to the ESS BizTools website, www.essbiztools.com.au. On our website, click on affiliate packages. It's very clear on the home page that you will go to. Then click on TaxFitness, and it gives you some details of what Darren's organisation supplies. Then you click on subscribe to TaxFitness, and that will take you through to the TaxFitness website, and you complete your subscription on that basis. But you have to insert, Darren mentioned it before, ESS 100. That's the trigger for your $200 discount and for the 12 months access to the ESS BizTools starter package. Darren's organisation confirms the subscription with ESS, and the next day we will confirm to you, if you've subscribed, that you will get access to the starter package. And then you will be getting interaction with TaxFitness and also with ESS BizTools as we take you through this process to help you become a very efficient firm on offering advisory services to your clients. So that's about it for today in this discussion, Darren. We've got no questions for viewers that are watching this recording. If you would like to send us in some questions, and if you'd like to participate in a podcast, I'll give you the date of the next podcast with Darren in a moment, but you can attend the podcast and type in the question while we're talking, and we will look at the question and give you our comments. Or if you want to, you could send me the question earlier. So just send it to peter@essbiztools.com.au. I'll send it across to Darren, and we'll give you some feedback in that presentation. And the next podcast we have with you, Darren, is on Thursday, the 12th of March at 11 a.m. AEST. So please note that in your calendars. You can register for that webinar by going onto the ESS BizTools website. And on the top line, there's a heading, upcoming webinars and podcasts. Just click onto that, and the podcast that's been presented in conjunction with TaxFitness and the podcast that's been presented, you can look at that. And if you wish to register to attend, please do so. So, Darren, have you got any final comments you want to make on benchmarking today?
What? I'm trying to think of the contra argument. Why you wouldn't benchmark, and I just can't think of anything, to be honest. It's just,
I can't think of any. I think it's I've always
it's a no-brainer,
I've always thought benchmarking was important, but you've taken it the next step, I think. And even though I was and I've got no reason not to still be a strong supporter of benchmarking.com, which is what FMRC did. I think this is a winner, what you've done on the 20% basis to do the comparison, because no one wants their football team to be in the bottom four. They want to be in the top four. Sorry, I was thinking about the English Premier League as I was talking there. Everyone's trying to knock off Arsenal or Manchester City, and you see as the pressure builds up, some of the Arsenal lost to a very small, kind of struggling club the other day, but pressure builds up. The same thing happens in businesses, doesn't it? And if you're able to be saying to them, well, you're on target, or you're only 2% away, or whatever, it gives them that assurance, because running a business, a small business especially, is very, very lonely for your clients.
Oh, 100%. And also, it can be a financial disaster. As we know, 43% are losing money. So, people start a business, buy a business, no experience. If it's not managed properly, they can wipe out the whole family's finances. And it's not the business owner that just suffers. It's their spouses, it's their children, we've got to do better.
Yep. And I think I've been on debates at times in various forums, and had other people there, solicitors, of course, business advisors that are specializing in particular areas, and accountants. I don't think I've come across another group of professionals who can give advice to SMEs as good as accountants. Sure, SMEs they definitely need solicitors. They probably need AI guys, consultants these days. They need people to establish their websites and all this, but they tend to be one-off sort of jobs. The accountant, I think, should be involved in setting up their daily and their weekly and their monthly systems, and then monitoring and meeting, I think, every month with the client, maybe quarterly, but no longer, monthly.
Oh, 100%. Oh, 100%,
Okay, so until the, what did we say, the 12th of March, we'll reconvene, Darren. So thank you very much for participating today.
Thanks, Peter. Thanks, viewers. See you.
Thank you.
Bye-bye.
Goodbye. Thank you, everyone, for watching. And as I said, we'd like to see you on the 12th of March. And if you've got any comments on this podcast when you watch it, please send us an email, peter@essbiztools.com.au. Have a great day.
Thank you.
Bye. Thanks, mate.